Good evening, everyone. Welcome to the channel. Before I begin, here are my disclaimers. Today I am going to give you an update about Match Group Inc. quarterly report. Match Group Inc. offers a diverse range of digital technologies through its four main segments: Tinder, Hinge, Evergreen and Emerging, and Match Group Asia. The company's portfolio includes several prominent brands that cater to various user needs, such as dating platforms: Tinder, Hinge, Match, Meetic, OkCupid, Pairs, Plenty of Fish social networking app, Azar racially specific dating platform, BLK. These services are available in over 40 languages and can be accessed by users worldwide. Match Group Inc.'s stock price has dropped significantly in the past year due to disappointing quarterly earnings reports. The company's third quarter 2024 earnings report revealed underwhelming results, including a 9% decline in Tinder's monthly active users and missed revenue guidance. This led to an 18.7% drop on November 7, 2024. The second significant drop occurred on February 5, 2025, when shares fell 10.2%, following weak fourth quarter 2024 results. The company's full-year revenue guidance was significantly below expectations, and the decline in payers continued to be a major concern for investors. These disappointing reports have led to concerns over user growth and the effectiveness of Match Group's turnaround strategy. The primary drivers of revenue growth for Match Group are primarily driven by its core brands, such as Tinder and OkCupid, which have seen significant subscription and advertising revenue increases. Additionally, the company's Hinge segment has experienced growth, although specific metrics were not provided. Direct revenue has also grown in key markets, including the US and Europe, due to pricing optimizations. However, there are also several factors contributing to revenue decline. A decrease in payers at Tinder has had a negative impact on revenue, as well as foreign exchange effects on revenue. Furthermore, impairments and amortization of intangibles have been affected by the termination of live streaming services and Hakuna brand. Costs associated with legal settlements at Tinder have also contributed to revenue decline. Overall, Match Group's revenue growth is driven by its core brands and direct revenue, while revenue decline is primarily due to a decrease in payers at Tinder and foreign exchange effects. Net income and profit margins overview. The net income of the company has shown mixed results. In Q3 2025, it increased by 18.1% basic and 16.2% diluted compared to the same period in 2024. However, on a year-to-date basis, net income decreased from $393,035 in YTD 2024 to $403,805 in YTD 2025. Profit margins have also experienced fluctuations. The operating income margin declined by 0.6% in Q3 2025 and 0.4% in YTD 2025 compared to the same periods in 2024. Conversely, the net income margin improved by 2.4% in Q3 2025 and 0.5% in YTD 2025. The main reason for these changes is attributed to a settlement payment of $14 million related to an FTC lawsuit against the former Match Group. This one-time expense likely contributed to the decrease in net income on a year-to-date basis, despite the increase in Q3 2025. The company's financial performance indicates a significant improvement in its ability to generate cash from its core operations. The net cash provided by operating activities has increased by $79,591 from the previous year, reaching $757,600 in 2024. This substantial increase suggests that the company is efficiently managing its resources and generating sufficient revenue to cover its expenses, resulting in a positive operating cash flow. The company's financial performance reveals a mixed picture across its segments. On the positive side, Tinder and Hinge demonstrated strong growth, with Tinder's revenue increasing by 2.7% year-over-year, YoY, to $505.3 million, while Hinge's revenue surged by 27.1% YoY to $184.7 million. Both segments also showed improvement in operating income. In contrast, MG Asia and Evergreen and Emerging segments underperformed. MG Asia saw a decline in revenue by 4.2% YoY to $69.4 million, while its operating income improved from a loss of $18.9 million to a gain of $0.8 million. Evergreen and Emerging segments revenue decreased by 3.1% YoY to $156.3 million, with an operating income increase from a loss of $15.1 million to a gain of $31.4 million. Management's outlook on company strategy. The company has outlined several key points regarding its outlook and strategy. Firstly, the termination of live streaming services in dating applications and the sunset of the Hakuna application will result in a $30.6 million impairment charge. This decision suggests that management is prioritizing cost-cutting measures to optimize operations. Furthermore, management anticipates investing in capital expenditures to drive growth and expansion. Additionally, they expect to maintain or grow its user base while converting users into paying customers. These statements indicate that the company is focused on improving operational efficiency and increasing revenue through strategic investments. The company's financial summary reveals that it has engaged in both dividend payments and share buybacks. In 2024, the company paid out $140,893 in dividends and spent $549,905 on buying back shares. Additionally, in 2023, the company invested $630,623 in purchasing its own shares. That concludes the financial summary for Match Group Inc. Feel free to comment below, and I will be happy to answer them when possible.